All right, we're live. So welcome back to Dapp University. So today in this video, I'm going to talk about something that's going to cause more people to buy Ethereum. All right, one of my favorite things about Ethereum is there's so much that you can do with it. And I'm going to talk about a new development in this video today that will actually influence more people to purchase the asset to hold on to it for the long term. We're going to look at that. We're going to look at a lot of other updates that have happened in this space since yesterday. Again, we do these live streams Monday through Friday on this channel, so make sure you subscribe, turn notifications down below. You'll find out about these whenever we go live. And we're going to check on the cryptocurrency markets and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to become a blockchain master step-by-step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, I hate these disclaimers. There's lots of scammers down in the comment section below. Just ignore them. Like, I'll never give you my phone number on YouTube. Like, why would I do that? And I'll never ask you to invest with me. All right. So we got people jumping in the chat here today. We got Culture Highs, Automatic, Susan, Nas, Cryptonomic. Welcome, welcome, welcome. All right, so let's go ahead and jump in here. So I want to show you a development that I saw over this past week. Let's see here. Some funny comments in the chat here already. I'll get back to that later on in the stream if people want to talk about it. But I saw a development happen this week that I think is going to be pretty big for the Ethereum space. So one of the reasons that I'm so bullish on the Ethereum asset itself is because of what you can do with it. All right. So you've got Bitcoin where you can basically buy it and hold on to it. With ETH, you can do things with it like hold it, of course, just like Bitcoin. You can pay for transactions on the Ethereum network. You can do DeFi with it. You can lock it up, take out loans against it, use it as collateral, all kinds of stuff. You can stake it whenever you go to Ethereum 2.0. And I talked last week about how staking is a big deal. We saw JP Morgan talk about staking potentially launching massive industries around this, right? We'll talk about that here in a second. But one big development that I saw come up this past week is we're actually seeing Swiss bank Sygnum launching ETH 2.0 staking for their clients, okay? So if you're just brand new around here, don't even know what staking is. This is basically where you participate in securing the Ethereum network itself on Ethereum 2.0, which we haven't fully shipped yet. But when we do, basically you'll take ETH, you'll lock it up to help validate transactions on the network and secure it that way, okay? And you earn a passive income reward for doing that. Now, lots of people won't want to stake natively on the network because you have to essentially run a validator yourself. All right, it's a pretty technical task. And I expect to see more of these types of trends where, we see places like Coinbase offering staking, but here you actually have people who are in traditional finance, like outside of the crypto ecosystem, who are going to be able to stake natively just through a bank. All right, and this is one of the first instances that I've seen this type of thing, but I don't think it's going to be the last, okay? I could actually see this being a major trend where we see more banks offer this type of thing down the road. I think we actually probably are going to see more banks actually offer crypto services, let their clients get exposure to crypto through that means, okay? And some people will say, hey, this is not good because this is not very decentralized, right? Like we want people getting in the crypto ecosystem. We don't want, just grafting on crypto to the traditional financial ecosystem. But I would actually push back on that a little bit. I would say it also doesn't matter quite as much on how people get exposure to this type of thing. It just depends. We just want people to have the option of doing it. So basically, if people want to get exposure to ETH 2.0 staking through their traditional bank like this, and that's just what it takes to get them involved. That's one thing versus saying like, hey, you can't do it the decentralized way. You have to do it this way. That's what we don't want. We want people to have the option to get their hands dirty and do things the decentralized way. But if we have these centralized services that are built on top of this open platform that give people more exposure, then I'm definitely all for that. And so this is a big thing. And so we talked about last week how JP Morgan sees staking could jumpstart a $40 billion industry. All right. I talked about how this could be these paywalls. Well, I can only read the title. So, but anyways, JP Morgan talks about Ethereum could jumpstart a $40 billion industry around this. So you're talking about, massive capital flowing into the Ethereum ecosystem, the blockchain ecosystem, start these new types of businesses. You're talking about more people seeing this staking as an opportunity with their banks, more people just getting familiar with what staking is and a long-term, store of value and actually investment strategy. It's just a big, snowball effect that will have a huge impact on people's view of the Ether itself, the actual Ethereum asset. We've seen a huge shift in people's thinking about Ether over the past year. If you even went back a year plus, we had this sort of view of Ether as like this penny stock type of thing, this sort of like altcoin that nobody really took seriously. But that view is changing a lot. We're talking about, cryptocurrencies with like Bitcoin changing their perception over the last year or so as well, up to this institutional grade asset, the store of value, something that can be purchased on publicly traded companies' balance sheets, right? And we're seeing that same shift happen for Ether as these new developments happen, as it's integrated more and more and more into traditional finance, and seeing those bridges built over onto this new ecosystem. And that to me is going to have a snowball effect that will cause more people to actually buy the asset and be attractive for them to hold it long term. Because that's a huge thing about staking, is it makes it attractive to hold long term because you get the price appreciation of the asset that you purchase, but you also get this passive income reward on top of it. And I think that's in line with what J.P. Morgan's saying for this becoming a $40 billion industry here. So let's see here. Some people keep asking me about the Around the Blockchain show. Yeah, we'll talk about that towards the end of the stream. Totally. So let's get on to more of the updates. So another major update for the Ethereum space, particularly around stable coins, is this. All right, so this just came up this morning. I want to talk about it too because this is a big deal as well. So USDC, all right, so Circle. So USDC is a stable coin that's on top of the Ethereum blockchain. So stable coins are really big for the cryptocurrency space because, they let people hold cryptocurrency and not be subject to the price volatility. All right. So basically, if you're in the crypto ecosystem and like, let's say you're holding some coins, like some ERC20 tokens, maybe on the Ethereum network, and you want to cash out or maybe take less risk, you can go to a stable coin, right? And there's multiple stable coins on the market. There's USDC, there's DAI, and there's Tether, right? And there's a couple others, right? But those are some of the main ones. And they all work differently, okay? So DAI is like a crypto-backed stable coin. USDC is a fiat-backed stable coin. Tether's a fiat-backed stable coin. But Circle, the company who actually, or I should say the organization who basically it is responsible for creating USDC, have announced that they are going public. All right. So today we announced that we have signed definitive agreements for a transaction that will result in Circle becoming a publicly listed company on the New York Stock Exchange, trading under the ticker Circle. Okay. So this is a big deal because Circle's been around for a while. This vision has been large. And today, this is really cementing what's possible and makes crypto way more legitimate. All right, so this is the same type of thing we're seeing Coinbase go public over the past year. Of course, that kind of marked the top of the Bitcoin price, at least. We'll see if it's a short-term top or if it's a long-term top. But still, long-term, if you get the long-term in view, Coinbase going public is huge. Circle going public is huge. And one big benefit for this and for stablecoins in general is the transparency for stablecoins and why this is such a big deal. Because there's a lot of, controversy around like Tether, for example. Like people kind of wonder, is Tether actually backed by the assets that they say they're backed by? Okay. And then some people have the same types of concerns for USDC, but I want to pull up this thread here that I think is big. So it's kind of riffing off the idea of USDC going public or Circle going public. So a separate thread on being a public company and increasing public transparency around USDC because people want to have confidence in the stable coins themselves and their backings. So as they partner with major companies and financial institutions and as people around the world interact with USDC, becoming a public company is a critical step in providing greater transparency as a firm. So as a part of our transformation from a private to public company, that also creates an opportunity for Circle to also provide significant more transparency about the business we are building around USDC and about the reserves that back USDC. Okay, so this is critical for trust. So Circle intends to become the most public and transparent operators of full reserve, not the key there is not fractional reserve, stable coins in the market today. With upcoming public filings and new USDC reserve attestations, our intention is to provide a detailed summary of USDC reserve. So anyways, I won't read the entire thread here. That's the gist. But there's a lot of really important key things in there. Their intent is to, as they become public, they have to be more transparent about a lot of things, and this is actually going to increase the transparency of that. And one really key there is talking about being a full reserve, not a fractional reserve. So what does that mean, fractional reserve? So that's one of the big criticisms of the banking system. We've seen in the past. It's kind of antithetical to the crypto mindset in general. People like Bitcoin is created because of a lot of the practices that currently happen in the financial system. One of them, fractional reserve banking. Whenever you have a bank run, people come in and try to withdraw all their money from the bank, and the bank only has a fraction of it in their reserves, right? Then basically you have things like central banks printing money to help ease those situations over, which is kind of antithetical to Bitcoin's limited supply. People don't like fiat currency, all that type of stuff. And so that's one of the big criticisms of stablecoins is they don't want the same types of things where these stablecoins only have a fraction of their promised reserves in their, in their backing. But this is something that tries to basically give people more confidence in that type of thing. So we do see also a way more activity around, let's see here, crypto, let's see. So again, these are all these things I've talked about so far between staking natively in banks, between let's see here, USDC backing. Also, we're just seeing everything converge towards a more user-friendly crypto ecosystem for normal people. And I did a video a while back about institutions getting into decentralized finance or DeFi and why that's such a big deal, because you can basically bring a lot more money in with institutions sort of all in one go. When you're talking about you or I, maybe like retail investors who just get on a computer, use MetaMask and start doing decentralized finance that way, just straight with Ethereum, then it takes a lot of us to bring a significant amount of money into the space. But with institutions, you can bring a lot of money with a handful of players. And we see things like Compound Treasury pop up recently. All right, let me just pull that up. So, let's see here. Let me pull it up here. I spoke about this briefly, but I want to kind of just connect the dots here. Let me just close this. This is Compound Finance, one of the kind of original decentralized finance apps that does savings and lending. Compound launching their treasury product for institutional investors, where they can essentially take cash and put it into an account and then get the benefits of decentralized finance yields at fixed rates. So they could offer like 4% to a company that wants to just take their cash and then put it into decentralized finance, just literally with cash, and they get that 4% paid back to them actually in cash. So all the crypto stuff is abstracted to them, away from them behind the scenes. And that, I think, is one big way that cryptocurrency and blockchain technology can actually take off and be adopted to the masses, which is basically, basically the easier you can make this stuff to use to normal people, and more people and more money over time, the better that's going to be. Okay, and we're seeing examples of this type of thing. We're talking about the ETH staking inside the banks, Compound's treasury natively inside the banks, USDC having more transparent backing. All this stuff gives people confidence. It makes it easier to use and way more viable for a brand new financial system that we're trying to build down the road. So if any questions here in the chat. Yeah. So let's actually take a look at the crypto markets. So one thing to keep in mind is, I know everybody's probably a little we saw a little bit of a panic in the crypto markets over the past 24 hours or so. Let's just take a look here. Let me pull up prices on my screen here. All right, let's just pull up Bitcoin. So, yeah, Bitcoin, let's just take a look here. So Bitcoin's kind of been in this limbo for a while, trying to make up its mind as what it wants to be kind of bullish or bearish. We've seen this consolidation. We've seen a decrease in volatility over the past few weeks for sure. And when you get that decrease in volatility, it's usually a sign that Bitcoin wants to kind of make a significant move in either direction. It could be up or it could be down, right? We don't necessarily know for sure. It looks like we've seen, a little bit of a red candle here to the downside. So, what I'm watching out for is like seeing Bitcoin sort of breaking below this like $31,500 level. Because why that's significant to me? Well, you see, this downward trend, you see a lower low, you see a lower low, lower low, and then you kind of a double short-term bottom at least here. And I'm just curious to see if Bitcoin breaks below this short-term bottom before we can kind of make our mind what's going to happen next. The fact that we've dropped this much over the past couple days doesn't, in isolation, it's not necessarily that concerning to me. But yeah, we'll just have to wait and kind of see here. So we take a look on the Ether price as well. All right, let's see here. So Ether, same sort of thing. I mean, I think pretty much everybody's going to experience that same red candle that Bitcoin did. I think we're seeing kind of an overall risk-off happen across different markets because we're seeing a very similar type of thing. Let me just actually put up on TradingView. We're seeing a lot of the same type of stuff happen in the stock market right now, okay? So let me just, I can't find a good TradingView chart of it, but basically, stock market's taking a little bit of a risk off as well. Okay, and I think people are sensing this. I think people are a little bit worried about some of the major indices having a bit of a correction because they've kind of been. Let's just pull it up here. They've kind of been up only for a while, right? You don't see any real major dips in here, but we saw some dips in the past, right? And I think people are maybe a little bit worried about this type of thing. So one important thing to understand here is, crypto markets don't exist in isolation as much as people want crypto to be an uncorrelated asset to other asset classes. If the stock market, if people are just going like risk off in the stock market, then they're probably going to see a really similar type of thing happen in crypto. I don't think we're at that stage where we're just completely uncorrelated. It'd be great if we were, but I just don't think that's the reality. Okay, so let's look at a couple more things here. So people asked me yesterday about EIP 1559. Let me just pull this up on my screen here. So again, I want to reiterate in case you missed the stream yesterday. So the EIP 1559 network upgrade for Ethereum has been scheduled officially for August 4th, unless we get any kind of objection at the All-Core Devs meeting, which is going to happen tomorrow. Okay, so this is a really big deal. Again, this is the network upgrade for Ethereum that does a lot of things. The thing that people are most excited about is that it's actually going to you're actually going to burn ETH when new transactions are created. And if there's enough network activity, then basically we can basically, if there's more enough network activity, then Ethereum can become deflationary over time. Okay. So somebody asked me yesterday on the stream about like the triple halving, okay, and what that means. And I had some good ideas about things that would limit ETH supply long term. But actually, somebody put an answer in the comments that I thought was pretty great. So I wanted to pull it up and read it on my screen here. So basically, they were saying the triple halving refers to the block reward issuance going from over 4% a year to less than 0.5% a year when the transition is made to proof of stake versus the merge. So this is one. This is equivalent to the halving issuance rate of 3 times all at once, from 4% to 2% to 1% to 0.5%. This is independent of EIP 1559, which will further reduce net issuance. Okay. So thank you for that clarification, Paul. I just wanted to pull that screenshot up here and put it on my screen. I kind of seen that idea of the triple halving floating around, but I want to clarify that since I got the question yesterday in the live stream. I thought that was a pretty good answer. So it's not necessarily about 3 different factors. It's more about like the rate at which the ETH supply is going to get reduced, the issuance going to get reduced. So people talk about Bitcoin halving, basically the Bitcoin block subsidy getting cut in half every 4 years, and that having an impact on the price of Bitcoin, assuming that the demand stays the same or increases. And that ETH is going to experience this, triple halving, where we take that rate and we just reduce it 3 times. Okay, so let's see here. Let's see here. So we do see some other interesting metrics happen in the space right now. So Visa, we talk about Visa a lot on this channel. Of course, Visa is launching their pilot project with Crypto.com, where they're actually settling transactions on top of the Ethereum network itself. And so Visa saw more than $1 billion spent using crypto-linked cards in 2021. So this is a big deal. All right. Now we don't have clarification on exactly how these crypto cards work. The Visa experiment that I'm super excited about is basically where Visa lets people spend money with their cards, but actually uses the Ethereum blockchain for their payment rails, because I think that's huge, because I think that's one big benefit that ETH has, is essentially it can be a settlement layer for this type of thing. It's a public blockchain. We can settle transactions. One big benefit there is the speed and the cost. Okay, especially when you have something like a layer 2 down the road. But there are plenty of cryptocurrency cards where basically you just hold cryptocurrency, and then when you spend it on a card, it just gets converted to fiat at the point of sale and then uses the old financial rails. So that's probably a lot about what they're talking here. But it's still big that people like having these crypto-backed cards. As more people, holding crypto, more people spending it, big for adoption. We also saw NFT volume surge, right? So I made a video kind of talking about, NFTs, as the bubble popped, what's the future of NFTs looking like? We do have our summary of the first half of 2021, which is where basically NFT sales volume surges to 2.5 billion in the first half of 2021. All right, this is pretty crazy. So we can see the OpenSea sales here. So despite the hype around NFTs from a public perspective, the revenue still says that NFTs are hot. Okay, so if you compare that to maybe public interest, so let's just pull up Google Trends here. That's a pretty good indicator about sort of what the overall hype looks like. The hype has died down quite a bit. So if you look up like NFT, you can see the hype around NFTs based on the Google search volume has dropped, significantly. So like you're doing an NFT project and you're trying to get the word out, it's going to be a lot harder to do it right now with the public compared to how it was in, March or April or even February. But we're still seeing numbers, numbers for NFT revenue still pretty high, at least as recent as June. We'll see what the July numbers hold, but that's what we have so far. So, I'm still super bullish on NFTs long-term, super clear about that. Are some of the NFT projects probably overvalued and in a bubble and won't hold their value long-term? Totally. I think that's true of lots of smaller cap cryptocurrencies as well. But I do think that we have some solid NFTs that have long-term value proposition. I'm also super bullish on NFT just because of other use cases besides, digital pictures on a blockchain. I'm not saying that's an invalid use case. I'm just saying that there's a lot more to it than just that. And I think we're seeing lots of companies kind of get into the space and try to figure out what the next thing is and how we can use NFTs. And I've mentioned this several times on the channel, but I want to reiterate here, which is some of the use cases for NFTs that I can see are hindered more by regulations than actual technology limitations. Like if you wanted to model the deed to a house and put it on the blockchain, well, the technology to do that's not that hard. It's more about the regulation, right? So those are some things that we have to get clarification on and figure out over time. Somebody says, can't wait for a global blockchain-based KYC verification protocol so you don't have to give your private information to every single DEX. Yeah, totally. Somebody says, NFTs, yeah, we'll wait and see. NFTs, privacy, data, etc. Yeah. Let's see here. Do you think NFTs can replace the patent system? That's interesting. So I haven't thought about that as a use case. I could see, public records in general having, basically being NFTs. I don't think the patent system would be necessarily like the first thing to get digitized to an NFT, but that's an interesting use case for sure. So my thoughts on that's a good question. So thoughts on the future of DeFi and NFTs as collateral. So we're actually seeing, I believe we're seeing Aave experiment with this. So let me clarify what this person's asking. So let me pull up on my screen here. So basically, we're talking about basically how you can use different cryptocurrencies as collateral instead of decentralized finance or DeFi. So basically, let's say so DAI was a pretty good original example of this. So DAI is the stablecoin that I talked about earlier in this live stream. Where basically you can take a cryptocurrency like Ether. This is the original use case for DAI. Basically, you took Ether when it was a single cryptocurrency backed. You took Ether, and then you minted DAI, which is a stable coin. All right, and that stable coin was worth a fraction of what your Ether was, so it could be adjusted for the volatility. And then you had this stable coin that was pegged to the US dollar that had some sort of actual backing, which was Ether. So that was your collateral in that case. And we've seen that use case, get extrapolated to multiple different, use cases, just like regular savings and lending apps where you can, lock up any cryptocurrency as collateral that's based inside of the Ethereum network and then borrow a different cryptocurrency on the other side. So we've seen this now extended to NFTs being locked up as collateral, okay, where you can take those as an asset. Let's say you had a CryptoPunk that was really valuable and you wanted to collateralize and take a loan out against it with an actual cryptocurrency. Like, how could you do that? We're seeing experiments of that with DeFi. So what are my thoughts on this? That's what the initial question is. So I'm interested to see how this is implemented because I've seen this idea float around, but I want to see how they do it because one of the biggest challenges in NFTs, in my opinion, is valuing them. Of course, it's hard to value cryptocurrencies as well, but the thing about a fungible token, that's what a cryptocurrency is they're all worth the same. So if you have one Bitcoin, it's worth the same as another Bitcoin. If you have an NFT, it's not necessarily worth the same as another NFTs. That's what kind of makes it cool about collecting them. So I want to know, like, how do they appraise it when they give you some sort of, collateral, like when you use it as collateral? How do they actually figure out that value to determine what you can borrow? That's the big question that I have. So if anybody knows, let me know down in the comment section below. So somebody says, please comment around the blockchain last night, please. Yeah, it was a fun show. It was entertaining. I'll put it that way. Somebody says Compound has a lender option also, so that is cool. Yeah, totally. So one last statistic that I want to bring up today was basically the Coinbase App Store ranking. Okay, so this is something definitely to watch out for. If we get more froth in the cryptocurrency markets, people talk about basically Coinbase app ranking being a top signal for cryptocurrency markets. Okay. So essentially the whole idea here is that whenever the Coinbase app, like in the iOS app store, becomes the #1 ranked, that you're usually at the top because essentially what's happening there is, people are getting in, your retail investors are kind of FOMOing in and buying cryptocurrencies. They're downloading the app really quickly. That's new users basically getting into the system. And whenever you see that at #1 rank, that's typically kind of a top signal. So I see some data supporting that. All right. This is the crypto apps ranking on the US App Store. And you can see the graph over time. So here's when it was the highest. Okay. Was literally at the Bitcoin top. And then you see it back basically when the other kind of altcoins, Ether, were at their all-time highs as well. And then you can see the rank like way drop down. So it's pretty crazy. Some people are calling this the truest top signal known to man. Somebody said still missing the living room. So I'm still, it's actually not a living room, it's my office, but I'm still in the same room actually. It's just I have like some like soundproofing around me now. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so the more people can learn about blockchain. You know, if you're as fascinated with this technology as I am, you want to get your hands dirty, you know, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master's shortcut entirely, you know, I can show you become a blockchain master step by step from start to finish, you know, over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. Help people with zero coding experience become real world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp University.